how internal auditors are able to provide consultancy and to challenge the business when they are planning, and how we can protect our organizations in terms of corporate defense, saying that our compliance management systems are meeting international best practices. That is a complete different discussion than saying that we are using an in-house methodology or we are using some tools that they are not even scientifically proven. Um, we already came with the idea, but with the agenda. But let me just explain that you're gonna get a compliance risk register model. You're gonna get a modeling for risk quantification, and also I am going to give you a list of anti-retaliation controls that they are addressing the new ISO on compliance management systems. There is a journey that we are moving in Geneva for the ISO in terms of compliance, in terms of risk management, in terms of the relationship between good corporate governance and decision making. This journey started from the guidance on social responsibility, talking about that there are more than regulatory obligations and mandates that the organization needs to do and need to comply and need to demonstrate that they are performing controls. Then we were very focused on the anti-bribery because of the FCPA new cases, the number of fines and enforcements had been growing a lot in terms of anti-bribery and also related to criminal law. Then the ISO and the group supporting the governance and compliance practices and standards were focused on creating a new ISO that will cover requirements that we are able to certify, and this is one of the keys. Now we have the first international standard that we can demonstrate, not only because we are applying principles, but it can be tested in a specific control, specific requirements that we are able to show that we are in compliance with good practices related to any management system. What do we expect for a management system is now set. And this standard is also supported by a whistleblowing management system that provides also good guidance that you can also be certified in the way that you are managing tips and complaints and everything that goes through the whistleblowing line. How do you give the priority? How do you manage? How do you escalate? How do you communicate? Everything is set also with another supporting standard that finally is addressing good governance principles as a whole. This is the journey on how ISO is supporting compliance. And we have good guidelines in the way that we can certify or get an audit for any management system. The main certificate that we need to align in most of the organization is quality. We have certificates related to quality. They are very, very, very well accepted in the market. So everything that is referring to compliance can be supported by the new ISO in terms of quality, in terms of safety, in terms of environment, in terms of the energy, the asset management system that is also very, very critical. If you don't understand the assets, you are never going to understand the risks and the controls. Also, information, security information, how we protect the IT assets and the IT services are becoming critical. We have now a new list of controls, so security controls on information and technological assets. Some of these assets are focused on personal data, so we are also using the same approach, the same methodology, the same terminology, the same way that we are auditing for a subset of controls related to privacy. And also we need to add some compliance controls when we are talking about GDPR. We have technical controls in terms of how we are protecting personal data, but also we got a lot of compliance controls related to how we manage our consents and policies. And finally, that is also very relevant for Norway, the operation in the oil industry. So everything, any certificate that we are using for compliance against for ISO certifications can be supported by the same rule, and this ISO is extremely, extremely important. The ISO brings a new definition about what is an obligation, what is a compliance obligation. I use the definition of compliance, that is the way that any organization is able to meet the stakeholders' expectations. Whether those expectations are coming from regulations, laws, contracts, or we need to comply with expectations for certifiers, for ISO, whether we have self-commitment, whether we have some business values, social responsibility. Now, compliance is even supporting transformation initiatives. Compliance is supporting the way that we are adjusting to a new economy. And whatever is the project, whatever is the commitment, whatever is coming from any stakeholder, as long as there is an expectation, we need to comply with. As when finally the organization says that they want to comply, they want to meet that expectation. So we can use this standard for anti-bribery. We are using the standard for antitrust, privacy, extremely important, labor compliance, a lot of attention here, anti-money laundering, hell attention here, tax compliance also growing, contractual compliance, and criminal law. The ISO is also makes a difference in the way that we can sell compliance and we can sell internal audit. If an organization is able to demonstrate that they're going to comply not only with the contract, not only with the requirement that the organization has, but also with the requirement from customers, they will be able to look for a premium in the market. They will be able to sell compliance as a service. And this is one of the ideas that I am pushing. And we can think, okay, but we already have a COSO that is covering controls and compliance, and that's fine. The difference between the ISO and COSO is that we can get a certificate and we have requirements that are crystal clear in the way that they can go through an ISO certification rather than general principles. The ISO is not a textbook. It's just clear requirements, clear processes that you need to implement if you want to meet international standards. Also, the COSO is used by some internal audits, sometimes some financial reporting assurance, and that's all. When it comes to the ISO, we are able to integrate those requirements in any obligation, in any compliance management system. For instance, how we manage complaints from customers, how we are managing quality. And this is something that the COSO is so focused on financial controls that it's very hard to use in another way that we can integrate this approach into the business. At the end of the day, we want to use the same terminology, the same approach that the business is using. So it's also a way that you can use the ISO not only for the design, but also for the execution of the compliance policy and audit. And finally, you can understand the changes in the obligations. The ISO brings objective-centric or obligation-centric compliance. So we are starting from the changes in the expectation from the stakeholders. It's not that we need to evaluate changes in the internal processing and the strategy. The changes in the processing and strategies have a root cause. And the root cause is that the organization had decided to meet other obligations and to move forward for some obligations. So it's a different view between the ISO and COSO. And finally, the ISO is looking at improving performance. Risk is performance, risk is planning. And COSO is focused, finally, even though they say that there are some risks that they can create, opportunities and so on, is written at the very beginning. But then when it comes to all the management, is focused on risk reduction because they are focused on pure risk that they can only produce a loss. And we need to think how prosecutors are going to think, how prosecutors going to challenge the compliance management system in our organization if there is a breach, if there is a case that they need to investigate. And you can tell what they're going to ask. In the US, we have a clear requirements about how compliance programs should be challenged. And there are some questions that they are recommended by the Department of Justice to be asked. And this is the golden standard that any prosecutor in the world, they're going to look for. And the first question that they're going to do is say, okay, you are saying that you had decided to do that, and you had decided to not do that. Based on what? What is the methodology that you have used? And then you are better off if you say, look, I use the ISO 31022 standard that is on legal risk. It's based on the ISO on risk management. There are some principles and some principles about how we meet legal requirements. And we are using tools that they have been assessed as effective by science. And you are extremely, and there are plenty of cases in which you are very protected if you start talking in that direction, that you used international standards with best practices in risk. It's a different way that you are trying to convince a prosecutor that you have not done that control that make a failure in the compliance management system because a consultant say that, or it's an in-house methodology. That is a very weak position that organizations that they are not using these ideas are exposing to. Then they can ask, And it's there, it's in the guidance. What information was used? You cannot tell that two people in one room have not encrypted that data because they thought that it was a green risk. What is a green risk? The wet finger in the air, somebody trying to guess, is not the way to go. And this is very, very clear. If you say that you are using data from non-compliances, you are using data from control tests, you are using data related to losses, threat expositions, probabilistic models on those, you really can tell, saying, I apply all the due diligence here, and this is what happened. Data showed me that I should not do that. That is a different conversation than having a bias. Then they are asking how your compliance controls were balanced to the risk. We're all talking that internal audit should focus on smart controls and cost-effective controls and the transformation. And when it comes to risk, we are doing things to the best efforts. Saying, oh, okay, we need to control everything, and because we need to control everything, we don't have any idea about how much a control cost, and much less idea about which is the exposition that this control is trying to offset. If you are not using Monte Carlo simulation, decision trees, or any quantitative approach or probabilistic approach into risk, you're never going to be able to justify that there is a balance between controls and risks. So that is a different conversation. Also, they are asking how lessons are learned. This is a new question that they added. And they say, oh, look, I've been doing retro testing. So I was measuring my losses, disputes, returns, quality claims, frauds that occur in the organization. So I got plenty of data of the risks that they are materialized in terms of compliance, contractor compliance, quality compliance, whatever compliance is. Right, that say, oh no, we are always looking forward. There is not any retro testing if you are not using good approach. And then they're going to ask, how do you understand the context? This is what you have done for the organization, but how is coming? And then you can tell, okay, we are doing the thing that we had done last year, or you can say, no, look, I have a register of compliance obligation. That is one of the requests that is coming from this ISO. So let me show you the first tool here. You are going to receive a template for a compliance register. I said before that you need to understand your assets in order to understand risks. And you need to understand compliance risk when you are listing all the obligations. You need to have a list of all the obligations that are supporting any compliance management system. So I made a template for you guys here in this meeting saying, this is what we can use. This is a kind of a summary. You can talk about different areas, domains that are part of your ethics and compliance program. You can say this is the legislation or where or whatever the obligation is coming from. You need to have a title. You need to have a source from where the obligation is created. Is a law, is a contract, is a regulation, is a self-commitment. What is this about? Then you need to understand the scope. It may be a firm-wide obligation, or it may be an obligation that is only affecting a segment of third parties, a segment of your clients, or even a particular client. When we are dealing with concessions, for instance, oil field concessions, and coming from the oil and gas, and there is always, in Texas, there is always held a discussion about how do we need to comply with this license and this contract. And finally, it's been a challenge. It's been very challenging if you are not able to extract and standardize control for your operation from the particular clauses that you are committing to comply with in a contract. And this is the thing that you need to have visibility. You need to understand for a GDPR, you need to understand that there is a contract, the contract is covering personal data, and you got data processing clauses. And this is what you need to comply with. It's your client is the controller, you are the processor, and you need to start talking. You need to also understand who is the owner of each obligation. One single person. And that person is going to be in charge of understand, explain, decide how the processes and the controls are going to address those regulations, and to modify when there is a change in the expectations. So you need to have an owner here. Extremely important. And this is one of the things that is always challenging in the Nordic culture. Also, why you need to explain. You can do that. And there are different levels of aggregation in this type of registers. Usually, you got a high-level register that then you can navigate through the specific requirements, the specific clauses that they are related and you are standardizing. For instance, we can use different tools that they are in the market that this work is already done, or we can take care and good time and say, okay, this is the thing that I want to extract the obligation and I would really want to understand them. So I go through the contract, I go through the executive orders or whatever that you got in your industry, the concession contracts, and you go ahead and finally get all the requirements here embedded into this line. Then you can say, okay, this is which is the policy that is covering where we are. We are to maintain the policy to know that there are not so many changes. We need to improve. We are not covering the documentation and the design of the control that we should. Or finally, we are now in the stage of only controlling. You can say when the obligation was effective, the area of applicability, that it should be linked to the ownership, any requirements, authorization, interested parties. That is a good example for a register. If you don't understand the compliance obligation that you need to comply with, how can you tell that the ethic and compliance program is effective? This is very, 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 very needed. You cannot understand your risk if you don't understand the assets and the obligations. Never. Let me come back to the presentation. 1 second, it should be here. So we, in ISO, define risk as the effect of uncertainties on objectives. And now we got a very clear objective here that is to comply with these obligations. The ISO approach is very clear. You need to use the best available information. You cannot avoid using data in 2022. Also, the ISO is asking to balance the cost of actions to the expected loss exposure. Very, very, very important. How can you tell how much you need to invest in the controls or any treatment? It may be insurance, it may be outsourcing, it may be a premium that we are paying in a contract for that vendor to take the compliance, or maybe we are doing anything, but we need to know how much is the expected loss exposure for that project. And then, extremely important, we need to minimize biases. Risk is planning. Risk is decision making. Risk is not plotting cycles in a heat map, because we know very well that this is just malpractice. Why? Because we got plenty of evidence, scientifically proven, that using scoring systems, using risk matrices, using heat maps, it's a waste of time in a good day and malpractice in a bad day. They are misleading. I want to be clear, malpractice. If you are using a risk assessment in a 5x5, if you're using colors, adjectives, if you're using just the wet finger in the air, first thinking that the risk is an event, that there are plenty of risks that they are not triggering an event, thinking that the risk can only be controlled, thinking that there are thresholds in the risk. Science, and look at all these papers, they are showing that they are worse than useless, untrustworthy picture, defects still left unsolved, single factor impacts. You are only plotting a circle, a bubble, a dot. However, risk is a combination of different scenarios. There is a curve. Arbitrary feature of the scoring, aggregation is programmatical, and they are unable to compare risk. And you know, there is not any piece of evidence that is showing that this approach is working. And if you are promising that you are doing risk management, if you are promising, you are saying that you are doing risk with this approach, and you got the science showing, demonstrating that is wrong, that is not working, you are just being committing a malpractice. You are selling something that is demonstrated scientifically that is not done. Besides all the other things that we were commenting at the beginning. And this is the qualitative criteria. Lightly, this is coming from guidance that they are coming from internal audit. But look, when we are saying almost certain, likely, possible, unlikely, rare, whatever it means, and we are trying to link to the existing controls, whatever the control is just one reaction to the risk. We know scientifically that the words of estimated probabilities are at least confusing. What is important, or catastrophic, or likely, or probable, or unlikely, have a different meaning in different people, to different people. This is a study. People are thinking that almost certain is, some people think it's 100%, some people think that it's 80%, 60%. There is not any rationale in these words. It cannot be fixed. And this is one of the several failures, flaws, that this approach is showing. And at the end of the day, it's not only because it's wrong. You need to understand, if you target to be this, to be able to support the business, to answer, to get the right methodology, to answer, is this binding price covering all the liabilities in the contract? I am going to put a number in an envelope to bid for the oil field, for opening a highway or whatever. The price that I am calculating, whether it's a menu or whether it's a bidding, it's covering the liabilities, it's covering the risk that I'm taking, risk and return. You cannot tell that, oh, you need to select a red price. How much should the legal reserve be for this new service? We are talking about tolerance, okay? And writing this nice tolerance statement that the organization should not expose to risk to blah, 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 that they are affecting the reputation. The organization should have a zero tolerance to fraud. Okay, who is going to say that is not the case? And just because you are writing zero tolerance to fraud doesn't mean that it's not going to have any fraud. You need to have all the capabilities for the contract, the operation, the services that you are preparing when you are deciding to go ahead and go to the market, saying, okay, I got the capability to take it. The tolerance depends on the risk capacity. And there is a risk capacity for any decision making that is different. So you need to say, okay, for if we go ahead with this new service, with this new product, we need to have this legal reserve for different type of disputes, claims, whatever it is. Do you have an insurance coverage? When you are preparing an escalation for any approval and you say, if you are doing a purchase order that is higher than 10,000 Danish crowns, where is the 10,000 Danish crowns coming from? You cannot do that just because putting a wet finger in the air and say 10,000 is my appetite or whatever the appetite means. When you are selecting suppliers at that price, what you go for, the cheapest or the safest? How do you balance with price? You cannot answer that saying, oh, there is a red risk. Or you got a scoring system about, and then you rank your potential suppliers in a due diligence. How you can support the decision-making without quantifying risk? Or what is the best strategy to deal with a customer claim? Or any legal planning? You need to start thinking about at least a decision trees. Are you going to litigate? Are you going to settle? What you going to do? And very important to understand, only some risks are producing events if materialized. When we are talking in internal audit about risk, there is not a clear understanding that there are non-event risk. They mix together. So some risk, for instance, a fine for misreporting. Okay, you got the fraud, accounting fraud. Okay, accounting fraud. You're going to have a fine. It's going to be 1, 2, 3 cases each, I don't know, 100 years. Good. You cannot compare this risk that is usually going to be something that is going to happen very seldom and is going to have a fat tail of events. Maybe you got just a notification, or maybe you got a big fine. And you cannot tell about and compare these risks with the same approach that there is an error, a typo, in the way that somebody is raising a service order or whatever, and finally you need to have it, and you need to respond because it's a claim, or you are breaching. For instance, I don't know, in the banking industry, there are a lot of these risk when we are processing orders for customers. And they are completely different. You cannot say that there are going to be errors, there are going to be complaints, there are going to be disputes in any project that you are planning. Any project. The only thing that you are not sure is how much and how big. What you cannot tell whether it's going to be a fine for misreporting. in the project. And those risks are very different. So let me explain how we deal with that in with a quantitative approach, sorry. Risk is not a bubble. It's not a dot. We are not plotting risk. Risk is a combination of different impacts and different probabilities. Sometimes you are luckier, sometimes you are not. And because we are assuming that we are usually unlucky, we use a log normal distribution. That is the most common distribution. If you're talking about errors, you can use a normal distribution. If you can deal with different distribution, you need to understand distributions if you are approaching to risk. Let's say that for most of the compliance obligations, we know are coming from a log normal distribution. You got more cases that they are exceeding what you are expecting to be the maximum or the impact, the loss, rather than the minimum. A fat tail. And I got the formula here. This is a mathematical formula in order to calculate a loss with a log normal distribution. And let me show you the next model that is here. So imagine that you are assessing, let's go for the first example. Fines may occur due to misreporting financial statements. Good. Then the modeling tool, it's asking you for a maximum loss of the event. You can say that it's going to be 5 million Norwegian crowns, and the minimum. Let's say that for you, you think that they are 4 million. And you are more or less, because there are several cases in your industry, 90% sure. And then you can say, okay, how often do you expect this risk to happen? In the worst scenario, I expect this risk to happen each 50 years. So it's 2% exposition a year. And in the best scenario, I think that this risk will materialize once each 100 years, and it's going to be 100%. And you are 80% sure because you have not seen so many cases. So the tool is showing a histogram. It divides all the different scenarios that may happen here if you are more or less luckier, and you can add different risks here for any contract, any decision making that they are doing. Very important. We are not assessing risk for the decision that we already made. Risk is to be assessed before we decide. This is what you need to ensure, that before they engage and they decide and they sign, they start working on a project, they assess risk in the business line, in the business. So basically, you can have, there are not any hidden value here, and the tool is going to be based on a Monte Carlo simulation from 10,000 simulations that they say that your loss, for instance, is going to be almost 4 million here, but it's lower. Why is lower? Because you say that you are 90% sure. When you are saying you are 90% sure that you're going to be between 4 and 5, it means that you are 10% sure that it's going to be either lower than 4 or higher than 5. Basically, the tool will calculate all these scenarios here and will tell you if you want to cover, for instance, 80% of the scenarios, you need to set apart 80,000 a year for that contract to address the liabilities of being exposed to this risk, this compliance risk. You can use this model for whatever that you want to decide in the business. Then, let me come back to the presentation. Should be here. Some requirements for the ISO. You need to add the compliance obligations in SOPs and job descriptions. You need to cover the compliance controls in the performance appraisal and incentives. For what I am paying, I can tell which are my values. Know what is written, only for the incentive that I am paying and how I dismiss people. Those are my values, only values. All the companies have the same values. I need to analyze root causes and compliance violations. Which of the compliance violations? If there is a breach, if there is a particular type of loss, I need to first have a database, have a central repository of those losses, and understand which were the root causes. I can afford to miss risk. I cannot foresee the future. What cannot afford as an organization is to do not learn from the risks that materialized. I need to validate the quality and availability of the compliance documentation, and I need to assess the effectiveness of the compliance training and awareness. It's not that there is a compliance training and awareness, it's that if you are going to be certified, if you want to use this approach for monitoring, auditing your compliance officer, you need to ensure that the training and compliance awareness is being appraised. There is a way that we know whether it's effective or not. How much the people remember after the training, how much they knew before and how much they know after a training. You need to extend the due diligence for hiring and promotion. Usually we are we are having good candidates to vet employees and candidates. Good, we do this ongoing due diligence, but also when we are promoting people, we need to start talking about and hiring. We need to improve the employee vetting. Require discipline actions for non-compliances. Add the consequences of non-compliances in the compliance policy. To include anti-retaliation controls in the whistleblowing line, and to validate the consistencies and accuracy of the non-financial reporting. We have in Europe the non-financial reporting directive, and the data that is coming there for as any non-financial data is very hard to be audited. Because it's fragmented, there are different methodologies and so on, but it's explaining most of the value that we are providing externally. So this is where the reputational risks are coming from. And there is very, very, very little interest in internal audit, usually, to go deeper and validate, for instance, how the CO emissions are being calculated, or how the risks are being communicated, or what we are saying that we are doing that in terms of anti-corruption and not the other thing. We need to audit the non-financial information. It's a different playground. And the third tool is a list of anti-retaliation controls. I think that they are providing a good way in order to align the whistleblowing requirements and the compliance management system requirements in the ISOs with good practices in order to protect the whistleblowing. This is an ethical call that we have in audit. We are close to finish the meeting, almost on time, 3 minutes after, and I want to get just your attention to Ukraine. It's extremely important that we are also communicating how hard are for peaceful people in Ukraine uh, to deal, and at the end of the day, to deal with an invasion. And at the end of the day, when we are talking about compliance, we are talking about doing good. So that's why we need to promote and to protect people and to finally being able to take a position related to Russia. I am happy to connect. I am teaching these topics. So let me know if you have some questions and learning dreams in terms of these methodologies. It's very hard to explain them in 45 minutes, and we have some time for question, I guess.
Wow. Thanks for your eye-opener and mind-blowing session, Professor. So our working group has prepared some questions. So I want to let the group know that they should be ready with their questions. Before that, I will go through the chat, and at least personally, Professor, there are very few times that I feel that I'm learning something hands-on when I'm joining webinars. And this time I would say that I learned a lot. So I'll just briefly go through the chat, and then the working group will ask some questions. I have some questions myself as well. And for information, if somebody wants these tools which Professor has shared with us, please feel free to contact us or Professor directly. If you contact us, please go to the website, IIA Norway, and we will distribute the tools to you. So the first question, Professor, is related to, I think, one of the slides. Sorry, I will start with another question. Could you please give examples of synergies between COSO and ISO? This question is coming from Mark.
Mm-hmm. The ISO can be supported by the good knowledge that COSO is covering for processes supporting financial reporting. In the ISO world, we are always using the tools that decision makers have. As a risk manager, as a compliance officer, I don't want to work for me. I don't want the business to work for me. They don't need to report me the risk or the compliance things or the control self-assessment. What I need to do is to improve the tools that they are using to decide. So you can extend the COSO to the non-financial information. There is another topic that maybe is a good idea to cover here. I was talking about this for the Institute of Internal Auditors in Argentina, Spain, and Malaysia, for instance. How we audit the non-financial information. Very clear. I need to have a work plan to audit all this non-financial information. So you can use COSO that provides a lot of explanations to the ISO, but the ISO is going to conflict the principle that they are using for COSO in terms of compliance risk. ISO is asking for other principles that they are conflicting. But however, when it comes to assurance in the financial controls, it's good, and you can extend the same assurance to the non-financial data. Let's remember, 30 years ago, most of the information that the organization were releasing was financial. or accountants at that day were kings. Now, a very little tiny part of the information that we are releasing externally is related to the financial data. Nobody cares. Accounting is so disconnected for the value that nobody cares. I care about the credibility of the organization to deploy a business plan. And I need to understand how they're going to comply with those business plans. Who is testing? Who the assumptions for those plans? This is the non-financial data. And now we need to refocus internal audit deeply, because now you need to understand from how you calculate the CO emissions to how you ensure the human rights reporting. When in many organizations, they don't even know how many employees they are paying. That is a fact. If you ask how many employees you got internal to operation, they're gonna give you a number. To HR, they're gonna give you a number. To payroll, they're gonna give you the number. To the tax department, they're gonna give you a number. Just common definitions that they are not aligned in the non-financial area. That is a challenge for internal audit.
Perfect, Professor. The second question is, in fact, from a colleague of mine. She's asking, I think it's related to one of the slides. She's asking, may I ask which industries, countries, and which time period do they cover? This is the risk assessment slide, I think.
Yeah, it's for any country. I mean, and or maybe the template for the compliance register. No, it's just an example. I just took I created an example because I think that if you are receiving a template that is blank, you don't know how do you need to complete that template. But when you're receiving a template that has so at least dummy data, that you are able to tell, look, this is what you have here, and this is what is expected to be answered here with 3 examples, at least you know how you continue, how you can tailor that. So if the question is related to the example, it's not for a particular country, it's not for a particular period. It's just examples for you to understand how a compliance register would look like.
I see that there are coming a lot of questions now. We'll see if we can cover them in 4 minutes, Professor. Next question is, disciplinary actions are normally at the discretion of the management. Are there any benchmarks for disciplinary actions for breach in compliance in the oil and gas industry?
Oh, yeah. In the oil and gas industry, and I guess that it's not a guess, in any company, we have those values, like say ethics, integrity, performance, leadership, best in class, sustainability, customer focus. We love customer focus. I was working for ExxonMobil and Baker Hughes, Tenaris, so many companies there in the oil and gas industry. And we write those recipes. We put that in all the marketing communication, and we got very bold printing in the boardrooms and everything. All these decisions are there. But at the end of the day, there are only 3 values: how you hire people, how you promote people, and how you fire people. If you are not consistent with your values when you are firing people, whatever you write is paper compliance. If you say that you had 0 tolerance to fraud or 0 tolerance to corruption, but then you cannot apply discipline to one of the managers in Mexico, Angola, or Kazakhstan because they were passing money to oil, some transactions, to public officers, that is not a good discipline. You cannot apply discipline in those circumstances. So that is the benchmark. The benchmark are the way that you are living up your values. Of course, that you need to comply with the local labor laws, but it needs to be very clear that when we are saying that we have zero tolerance to fraud or zero tolerance to corruption, it means that we are going to spend whatever it takes in order to prosecute the employee that was committing a fraud or paying bribes. For instance, I was approving spending 40,000 euros on cases for corruption, trying to recover 10,000 euros. Why? Well, you are not going to be able to get it. You already applied discipline. You already dismissed that person. That person cried in the meeting room and blah, blah, blah. They say, oh, I'm going to bring the money back. And just say, okay, yeah, for sure. Why? Because you are investing 30,000 euros in training for the people that are there, that they are looking how you apply discipline. This is the thing. This is the benchmark. Also, thinking about the person that you are going to dismiss makes no sense. They are already out. Thinking about the people that are still in their company, how you invest in training, say, look, if you do that, I'm going to spend this amount of money on chasing you. That is the way that we are living up values. A lot of things to cover. We can go deeper in this question and a lot.
I see that we have way too many questions here, Professor, and it might be that you can catch up later.
Yes.
There are a lot of interesting questions. I'll take a last question, and the question from our network we will just take up directly with you, Professor. So last question, can you translate all compliance risks into a quantitative risk, for instance, reputational risk? And just adding from my side, usually, I would say that reputational risk is a consequential risk. It's impact consequence rather than a risk. But please feel free to address that question from your side.
Okay, there is not any risk to quantify reputational risk because there is no such a thing as a reputational risk. You are not losing credibility from nothing. You are losing your credibility because you materialized a risk in the operations of the compliance. They are saying, you promised to deliver the service, you have not delivered the service, and that's why I am going to another vendor, another company. That's why I asked you to do this thing, you are doing the other thing, that's why I'm going to find you, and you're going to be in the media. You are not in the media, if you are not breaching an operational requirement. So what we do is we are talking about the reputational impact of compliance and operational risk. That is a different approach. So you add the credibility, the loss of credibility in the analysis that you are doing for operational compliance. And you can measure. You can tell how many clients they're going to flight and how much is going to be the revenue they're going to lose. You know, and marketing knows how much they need to invest in order to offset a bad news. They already know. You can calculate how much your marketing cost is going to investment is going to be depreciated. And you can go and get data, right? And say, oh, reputation, we cannot. Other question that they like is, how do you value a life? As the actuaries and the insurance company are never going to be able to value a life. But we can quantify everything because at the end of the day, the only way that we can aggregate risk is that we are talking about probability to happen in a time horizon and monetary loss. Without these two things, you cannot say that two green risks are equal to a yellow risk. Good.
This is a good ending, Professor. I think we'll just say that thank you very much, and hopefully we can see you again in the future. And feel free to ask questions in the chat. And if Professor has time, he can use the chat himself, of course, as well. But I'm in contact with the Professor on LinkedIn. Yeah. And always cheering and kind of liking postings from Professor. So thank you very much, Professor Hernan.
Thank you so much. Highly appreciated. We are moving internal audit forward. We need that. We need that. The ideas and the tools are very immature, particularly for this area of the world in which companies have not been really challenged to extreme risk. We need to move forward what we are doing. So thank you so much for the time. Thank you.
Thanks. Take care.
Bye-bye.